So let's go over loan structure. Loan structure is really dependent on the type of a project and the amount of experience an investor has. If you're a brand new investor, right, you can expect to be bringing 20% of the purchase price or 15% of the total deal cost, meaning purchase plus acquisition, the greater of the two, to the closing table for your down payment. Closing costs are basic. They'll range from $2,800 to $3,200, depending on how many units are being appraised. And then you have the option of paying points or paying us no origination fees. Your loan officer will also go over reserves with you. What I tell my clients, it's important to be able to show that you can bring either 20% of purchase or 15% of the total project's cost, right? And the remaining closing costs available. $3,000 for closing. Reserves are also important. Make sure that you can show typically 7 to 10% of the loan amount in reserves, which we do not collect. We just want to see it's available to you so you can get the project off the ground and start it smoothly, right? Now, another thing to mention is we conduct appraisals, right? Again, this is all about loan structure. The appraisal is to make sure we're not lending over a certain amount of the after construction value. Typically, if it's your first deal, we want to make sure we're not lending over 65% of the after construction value, the ARV, right? If you're buying a property without any renovation, we want to make sure we're not lending over 65% of the current value, since we're not lending on the value add portion. Now, as you do more deals, as you exit more projects, we will lend more aggressively, right? Some investors who have done 2 to 3 deals, we can finance up to 85% of acquisition, and they get more room on the appraisal. Instead of 65, it can go up to 75% of the appraised value. As you do 5 deals, we'll actually provide a product where we can provide more leverage, even up to maybe even 90%, right? So again, we're built to scale. Loan structure is very dependent on experience. As long as you meet minimum credit criteria, it's all about that 3-year track record of one of the co-signers. Now, the terms of the loan are very straightforward. These are 12-month interest-only loans where you're making interest-only payments on a monthly basis. Typically, it's on the total loan amount if your construction budget is under 6 figures, right? We do understand that once budgets get to a 6-figure range, we do not want to burden our investors with added debt costs where they're not even using the construction money. So if you have a construction project where it's $100,000 or more on the budget, you're only paying interest as money is being used. Very important for our developers out there, right? A lot of times people will come to us with a cash property, which they just bought in cash, and they only need construction money. You're not paying interest on that if you haven't drawn down on the money quite yet. So you can be strategic. You can combine that with the 0-point program where you're paying no origination fee, you're not paying a dime of interest on large construction budgets until you start drawing down the money. Discuss that with your loan officer, especially if you're a qualified builder. We see that quite a bit, right? Again, the loan structure, 12 months, interest only. There are no prepayment penalties with us. So now you can combine the 0-point product with no prepayment penalties, and even our 30-year team who can help you refinance out of a project and help you hold it and stabilize you in a long-term 30-year fixed interest program. No prepayment penalties means you can pay us off at any time, 5, 4, 3, 2, 1 months. It doesn't really matter. Now, for those developers who are doing larger projects, commercial multifamily, 5 units plus, sometimes up to 40 to 60 units, we do provide 18 to 24-month terms. If you're also an investor doing just a regular fix and flip and you're worried about the time span of your project, we provide extensions. Each extension is good for 3 months at a time. There is an additional fee. Typically, it's between 0.5% to 1% of the loan, but we're here to extend that loan for you. We want to see you finish the project. We want to see you churn that capital and do more deals with us so we can help you continue to grow.